Morning, everyone. Welcome to the July Finance and Performance meeting. Welcome to anyone watching online. And we'll start this morning while I read the council here. If you can all stand, please. Almighty God, as members of the Rangitikei District Council, we give thanks for all the good things of our district and the advantages we enjoy. We pray that you will give us wisdom and guidance as we conduct the affairs of this meeting. We pray for all the communities and the district we represent. Help us to be fair and honest in our discussions and help us to work together in unity for the welfare of all your people. Amen. So I'd like to move that we give an apology from Councillor Maughan. That would be accepted. Thank you, Councillor Carter, for seconding. All those in favour, please say aye.
Aye.
Against? Carried. Public forum. I've not been notified of any public forum. Item number 4 is conflict of interest declaration. Does anyone have any conflicts they'd like to declare now? If not, you know the normal procedure. Item 5 is confirmation of the order of business. No new items to be added. Oh, yes, sorry.
Just not a new item, but I just wonder where to raise this. I sent out an email to councillors around Minister Bishop's request for regular contributions to the National Infrastructural Pipeline. And I just wonder through the Chief Executive whether we can note it or do we wish to comment or anything.
I'll make a quick comment. We've done an assessment. It's a mixture, probably more relating to assets rather than finance. There's a mixture of a response required. So once we've understood more about what the government or what the minister is wanting, then I'll get a team together to look at how we're actually going to approach it. Like I've said to you, it's a very, very complex spreadsheet they've sent us. So we need to understand as staff what they're wanting to achieve by the information they've requested. So it is probably more of an asset focus rather than a finance focus.
So
yeah.
Could we just note it as an action required at some stage from somewhere? Or...
Yeah.
Okay, I'm fine with that.
Thank you. So no other changes to the order paper. Item number 6 is the confirmation of minutes of our previous meeting. And I call for any amendments or matters arising. Page 6, 7, 8, 9, and 10. I have a move and a second to confirm those minutes.
Do so.
Thank you, Your Worship. Thank you, Councillor Wilson. All those in favour?
Right.
Against? Carried. Item number 7 is the follow-up actions from previous meetings. We've got one there. Is there any discussion required on that? And there's nothing anyone wants added or discuss, any other discussion at this stage? Okay. So I would I'll move that the follow-up actions items from the finance and performance meeting be received. Seconder, please. Thank you, Councillor Sutherland. All those in favour? Against? Carried. Moving to my chair's report. I've been reflecting on the state of our local economy and perusing our quarterly economic updates. There's nothing better than an unbudgeted surplus to lift farmer morale. As 30% of our district's GDP comes from the primary sector, in addition to 26% of our employment opportunities. The rural sector is experiencing significant growth in confidence. Last year was extremely challenging on the farm, with record lows, and now we are back. And now we're back. Beg your pardon. And now we are experiencing record highs with this on the back of a strong milk price, record lamb and beef prices, and dropping interest rates. Yet meanwhile, we see subdued customer spending and a significant ongoing impact of cost of living pressures. The struggle and hardship is real to some in our district. Typically, there is a lag of some 6 to 18 months before the positive effects in our rural economy flow to the other sectors. But green shoots are on the horizon, and I look forward to a positive recovery throughout the district as our council tries to navigate the constant uncertainty and significant change that we seem to be negotiating. Herein lies our opportunity. I'll move that my chair's report be received.
Ask some questions around.
Right, sorry.
In terms of the dairy sector, you commented on that budget's sitting at about $10, around about $10, and there was a prediction received yesterday that that's likely to continue. There's some optimism there. You have some intimate knowledge of the red meat sector. Is the same confidence there that the strength of the schedule is going to continue?
If I believe my newspaper, yes.
Great response.
However, this is the voluntary nature of our rural sector, and I'm sure most farmers would be very happy if there was a happy medium that was consistent rather than these extreme highs and lows. Yeah, but yes, the price going forward certainly for this coming season is looking positive.
So most of our grinding beef especially goes into the States. Is there any feedback from the sector around where Trump is at in terms of that?
I know nothing more than most people in that respect. So I think tomorrow is his announcements, isn't it, around the tariffs?
Yeah.
So we won't say.
That's June.
So, but yes, I mean, not just our mince, all our red meat products have been selling very, very well. Yeah. I think that still we're facing high inflation. You know, over the last few years, it's got up to around 30%. So the cost of production are still a concern, both across dairy and the red meat sector.
Yeah, thank you.
I'll try again. I'll move that the chair's report July 2025 be received. Second it, please. Councillor Carter, thank you. All those in favour? Against, carried. Item number 9 is the reports for information. Thank you.
Good morning, everyone. Before I hand this over to my Manager of Financial Services, I just want to make a couple of comments. One is the apology for 1.4 and 1.5. It should just be 1.4. But also just to reiterate that this is what we call our management accounts. So when you see the draft annual report, probably next month, I'd expect, it is always different to what you see in your management accounts, because in our annual report, we have a lot of behind the scenes adjustments, whether it's our work in progress being capitalised, finalising costs that have come through on an annual basis, and just any of those last minute adjustments around our capital is probably our biggest. So that was probably really all I wanted to cover. We're already in the middle, not in the middle, but we're doing the prelim of our final audit. So the team are pretty busy going through our items line by line and seeing what's correct. With that, I'll hand over to Lorraine.
Morena, Proto, Madam Chair. The couple of things in the snapshot to note this month, page 16, external debt, a rollover of $5 million of our debt on the 24th. It's showing that's rolled over for another 90 days. We've also borrowed a further $5 million to meet capital commitments. So bringing our total external borrowing to 54 million for the year end. We carried out a cost benefit analysis of the Treasury Advisory Services as we were asked to do, based on, we did a comparison of the 3-year fixed rate versus floating commercial paper rate, because we would normally have borrowed fixed term, but we were advised to move it into that floating. And for the 8-month period that we've had the Treasury Advisory and have been doing that, came out as a cost neutral.
Question, if I may, Chair? Sorry, just on the borrowing section, you said you've rolled a parcel over. I guess that's the second parcel which had a setting date of 24/1/25 with the maturity date of 24/7/25. Is that
That's
correct?
the rollover.
And you've rolled that over to a floating rate.
It was floating,
Yes.
a commercial bill rate.
Yeah.
For a further 3 months.
And what is that floating rate currently?
3 points.
It's 3.66, and yeah, is it the same?
Yeah.
Okay, and what do you plan to do with the second parcel of borrowing directly below it, which appears to be maturing on 23/9/25? Have you had any thoughts on that?
That's the new borrowing.
That's the new borrowing.
That's the new borrowing,
Oh, I see.
bringing up to a total of 54.
That's got a slightly different interest rate.
Yes, because it's a separate parcel.
It's a separate parcel in addition to. Okay, thank you.
Through the chair, we've increased our external debt to 54 million as we close off the year, which is still well below what we were budgeting in our annual plan, long-term plan. Which I think off the top of my head was about 73.
Yes.
Thank you.
There's no opportunity to buy our way out of some of the higher costs and interests that we have.
Through the chair, the unfortunate part is most of that was fixed debt, which makes it the cost to break it. And given that some of that is going to head across to our Three Waters, probably the cost to break it would be hard to justify.
Okay.
But our advisor keeps us across this and we can put that to him and see what his recommendation is. Because that's the beauty of having him. And at the moment, while we're not showing a lot of benefit, as in we're cost neutral, as we move to more opportunity that our fixed debt frees us up, that we can benefit and do this differently as we will start to see those real wins. Okay. Look forward to those. Me too. It's still reasonably low, our overall cost of debt, which is good. Councillor Wolf?
So with these borrowings maturing in the short term, what is the advice from our Treasury advisor to that the interest rates are coming down further, or we just keep rolling it until, is there a consensus as to what direction you're actually feeling this is going to go?
The message we're getting at the moment is that we're expecting interest rates to fall again between now and November. So we're just, I was going to say hedging our bets, but yeah, keeping our opportunity there so that we can, if we're going to lock in, we can lock in at the best potential rate we can get for 2025. It's a hard one to know. I don't have the crystal ball.
Through Madam Chair, so effectively we're entering into an arrangement with a regional CCO And probably the faster that gets set up, and because they're going to have an interest in what our own position is. It's going to be a tricky space for handover time, isn't it?
It's through the chair, there's quite a bit of work that we need to be able to make sure we can do it. And a big part of that is a piece of work that Mr. Pedley's got to do. And it's making sure we can take that tranche of debt, every one of them, and tie them to the assets that are handing over. So everything connects and joins the dots to our three waters, because that's a real big piece that if we need to be able to have a very clear line for any form of auditing.
Because there was a paper that was presented to us around we just can't simply transfer a loan entity. That's more complex than that. Isn't it?
Correct. We can't, there's two parts. We thought initially, because everyone will still use local government funding agency, that we'd be able to notate our debt across. We can't do that. So we're trying to set our debt up so it ends, the tranches end as close as we can to when we think the debt will transfer across, which is around that 27, 28. I believe we've got up to 5 years that they will cover the cost of interest if we can't break it, or it's not, they'll cover all of those costs. So when I look at this, our managing our debt to make sure we've got that aligned and we can hand across. And I think we're relatively okay with this.
Supplementary to that. So if we have, say, 50 million sitting in associated debt with Three Water, 27, 28, we're unlikely to hand it all over at the same.
Correct, but they will fund
They cover the
cost of interest and
funding.
any administration. Correct,
Sits against our asset base.
correct.
Okay, thank you.
Just on that topic, just some clarification around that conversation. Page 18, total loans by activity. Most of our water debt is sitting on internal loans as opposed to external loans. Does that affect how we transfer that?
Through the chair, no. We typically finalise our internal debt to external debt at the end of the year as part of our end of year process. But what we sought very early in our days with the DIA interactions is that even if we leave it as internal debt, it is treated exactly the same as external debt. And so that would be able to move across reasonably easy because there's no tranches of debt to worry about.
But being internal debt, there's no borrowing covenants around breaking a loan.
No, there is not.
No, so
But we still may need to borrow depending on our cash flow. And that's where it comes down to. Because all you're doing is your internal debt is using your existing cash flow. So we would have to use it.
Well, just supplementary, 5.6, at the bottom of that page, you talk about the council's treasury function as an internal bank, and then you go on to say the interest charged to the activities. Is council's internal bank charging interest on those activities within the financial function?
Correct. We charge interest income and interest expense.
Yeah. And as detailed below, I couldn't find that information, whether I'm not seeing it.
I think it's part of your borrowing ratios and the total. Just going to have a look now.
I just thought I might see a graph like the graph above.
I'm trying to understand what you.
You said the interest charged to the activities as detailed below. But I was presuming that would be a similar graph to the one total loans by activity. There'd be an interest component associated with each of those areas.
Yeah, we did have.
Yeah, I'm just wondering whether it's.
As it dropped out, we used to show the cost of interest. I don't know if we did it right to the activity. I'll have to have a look at that one for you.
Thank you.
Thank you.
That's raised an interesting point in terms of that internal interest rate that's charged midway between the cost of what we take the money, our cost of money is, and where the market sits, isn't it? It really only becomes a factor if somebody like the rural water schemes are using it.
We typically use the average cost of the debt, if I recall correctly, and we estimate that in our budget process, and it would only look at doing an adjustment if there was a material difference.
The second part there is in terms of local water done well. So we transfer these debts and they pay back the loan function. There's no covenants around how that return money is to be handled, is there? So in other words,
That's council's,
determination.
it's yours to manage. Because there'll be a clean up between the assets and the debt and the offset. And at the end of the day, that is council receiving back their funds, and that is council's using your financial policies on what you do with that cash.
I guess, Madam Chair, what I'm getting at is that money has been created by individual residents, ratepayers, but there's no way that we can return it back to those people individually because there's no calculation basis there.
No, but what it does is it frees us up having to borrow for other activities for our existing core activities that continue. So we won't have debt, so they benefit. And again, thinking intergenerational, that debt's gone across generations and the return, and we'll be able to reinvest in other assets depending on what council chooses. We don't use debt for OPEX, operational, so that will sit in our banks. We can invest it, we can invest in assets, or we can reinvest in a return that brings longevity back to the ratepayer. Does that answer it?
Yeah, but there's nothing in the.
But it's going to clear the debt off, correct?
Thank you.
Other queries? Thank you. Thank you. I enjoyed colour coding on page 31, and we look forward to our next meeting when we're going through the draft venue details and carry forwards, etc.
It won't be colour coded. We will meet the strict rules of Audit New Zealand. It won't be colour coded.
Oh, sorry, Councillor Law.
Our usual shortfall of capital expense graph on page, where is? Page. Thing is it? We had a workshop dedicated to this, this topic, but I'm beginning to wonder whether this graph, which is continuously at a shortfall to the budgeted amount, we could approach in a different way where we have the ideal line, which is what we would plan for, but we maybe need a realistic expectation line that's actually what we may be expecting for the year, because the public looks at this continuously and thinks, why is council so inept at the planning of the capital expenditure? And we have numerous workshops explaining what goes wrong with all these plans, and they're totally acceptable, but we perhaps could approach this in a different way and say this is what we'd like if all the things fall in our favour, but realistically this is what we're looking at for the year, because, and then we can refer to perhaps the reports or the workshops that explain why for whatever reason. So maybe not every report, but that would be something that we could look forward to as a easier tool to explain to the public why. And so we have a dotted line. It's like, this is where we actually are looking at really. This is what we'd like to do if things were perfect in a perfect world.
So effectively a revised budget, yeah.
So through the chair, we could look at that quite easily, probably on a quarterly basis, because it'd be council resolutions that actually tell us to change the budget. And if we go to page 31, and you can see with our colour coding the movements,
Yes.
we did that later in the year, but we could be doing that as the information comes to hand. Often it doesn't come till sort of 8, 9 months through, but we could look at that and adjust our revised budget to reflect that so that you could see the budget, revised budget and actual progress. If that's of help.
If it's not too onerous,
I think it would be really helpful.
Do that.
thank you.
Councillor Wilson?
Yeah, it's a good point that councillor Wong raises, but I'm just thinking this, and the finance is dealing with actuals and whether or not that could be applied through an assets and infrastructure meeting scenario where it had explanations captured, which might help, because with this budget here, we are dealing with actuals. And I just wonder if the better space for it could actually be through assets and infrastructure with explanatory notes, where we have the different projects in a lot more detail. Just throwing that out for some thought, because this is dealing with actuals, and not hypotheticals to a certain extent.
We'll leave that with you
Yeah.
to consider.
Yeah, I'll look at Mr. Bernardi and I'm sure between us we can make something happen because the majority of it is around assets and infrastructure, so good call.
Some of these actually become actuals in terms of change when a paper has come to council asking for a carryover, because that's when it actually becomes a financial figure in terms of depreciation and everything else that flows from that. So that's just the only stage that I think that you could actually really signal the change, because it's a council resolution at that stage.
And through the chair, for the annual report, it is based on the original LTP budget. So our original LTP budget said we were going to spend 36.6 mil and we've spent 20 of that. So that's actually the one that will be externally reported, because our revised budget is purely management accounting for us here to keep you abreast of what's going on.
Thank you. Councillor Loudon, can we make it quick? I have got basically a minute to finish this meeting.
The sustainability is in the red, and we know that. Is the line going to continue? Are we going to be unsustainable for a while?
Through the chair, yes, if you look at your long-term plan, I believe it was 5 years that you were going to be an unbalanced budget.
Sure, that's not new information. Okay, so I will move the financial snapshot July 2025 be received. Seconded, please. Thank you, councillor Carter. All those in favour? Against? Carried. So we've got the QB report, item 9.2. As we've said there, any comments?
But I think it's all under the reason for report. It's the new financial year, so it's from July. Information provided. Capital values since last report have increased by 1.3 million. Units, total rating units increased by 11. And since the beginning of July, there's been 1 building consent and 9 subdivisions completed, 36 sales processed.
Awesome. Any questions, councillors? So can I have a mover and seconder for receiving that report, please? Councillor Carter, seconded councillor Scarlett. All those in favour? It's carried. Thank you. Item 9.3 is the public feedback and performance report for June 2025. We'll welcome Jo.
Yeah, kia ora. Sorry, just given that we've got about 60 seconds. Kia ora tātou through you, Madam Chair. I take the report as received and read. If there are any questions.
Thank you. Any questions for Jo this morning? Thank you. Always enjoy particularly the communication part of the report, and certainly seen a significant change in recent times. Thank you. So I'm happy to move that the public feedback and performance report for June 2025 is received. Seconded, please. Councillor Carter. All those in favour? Against? Carried. Fantastic. Sorry for those online, that was a fast meeting, but we've got a workshop commencing at 10 o'clock. So thank you very much. And thank you to